Hey, good morning. This is Mayor Valensky with Driving Markets. Okay, so the Fed finished its FOMC meeting yesterday, which is the Federal Open Market Committee meeting. And Jerome Powell, who is Fed chairman of the FOMC and of the Fed, has stated there will be 3 interest rate rises in 2022, the big 3. What level of interest rate rises, we don't know. Probably it's going to be 25 basis points on each one. So interest rates in the States are likely to move up to 0.75%, which will make the cost of borrowing a little bit more expensive. Is that going to be enough to dampen inflation? Is that going to be enough to reduce consumer spending? In my opinion, very, very unlikely. What you're likely to have is very simple. You're likely to have people will absorb the interest rate cost and continue spending, and I believe that the cost of raw materials will continue rising. Yesterday, the markets were actually down before the decision or before the outcome of the FOMC meeting, and then the markets finished up. So why would the markets finish up if we're going to raise interest rates? Very simple. For those traders who are beginners and those traders who are experienced, this video tries to cover all areas, but not necessarily successfully. So let's go into why would the market rise. The market would rise, quite simple, on a relief rally. A relief rally is where you go, whew, thank God, it's not as bad as we thought, or now we know the facts, or the illness has been diagnosed. That's exactly what a relief rally is. So the market jumped up significantly yesterday. Why? Because all of the fear factor has been removed from the market as far as the investors are concerned, and they went out to buy. Apple at near all-time highs, Tesla shot up 2%, all the FANGs, the Facebooks, the Netflix, etc. went up, and therefore you've got significant enthusiasm now because everyone's going, phew, it's over, there's no fear anymore, and therefore we can move on. Remember, the market is driven by fear, 2 sides of fear. Number 1, fear that the market will fall and people will lose a lot of money. And the other fear is when people are invested heavily, is there a fear that they're going to make profits? And therefore they say profits have to climb a wall of fear. So everything is to do with psychology. As I've stated before many times in these productions, everything is to do with psychology. The other factor yesterday is it's a common expression. It's called sell on rumor, buy on fact. So yesterday the investors were selling the market on the rumors, which are unfounded rumors as to what's going to happen. And then when the facts came out that the Fed chair said they might increase interest rates, or they're going to increase interest rates 3 times, that became fact. Everyone says, whoa, it's over, let's go and buy the market. Where does that leave investors going forward? Probably, as I said all along, there'll be a rally now all the way through to Christmas. Why? There's 2 reasons. Number 1, you've got that festive feeling that has an impact on markets. And number 2, the bankers and the traders that are looking to get large bonuses at the end of the year, what they'll do is they'll push the markets to all-time high in order to make their profits, in order to book their profits, and then their bonuses are based on production of 2021. So the markets are near the all-time high. They probably will go above the all-time highs now and up until Christmas and the New Year, because it's in the interest of the traders in order to get their bonuses from Barclays Bank, from UBS, from Goldman Sachs, from JP Morgan, from Nomura, etc., etc. It's in their interest to book as much profit as possible, and they will get huge bonuses paid out in January. Okay, so that's another reason why the markets will actually rise between now and the end of December. Of course, everything I've said is my opinion, and don't take it as an absolute, otherwise you could end up losing money. Going into January, then you're probably going to have the effects of the pandemic. I don't know if you're aware, but in the UK yesterday they recorded the high of all-time highs on the pandemic. 78,600 people officially were ill. Unofficially could be well above 100,000, but we don't know yet. Omicron is very, very contagious, and therefore that could also have an impact. Home builders in the States, just to let you know, have reported all-time high demand for individual single housing units, and that's also boosted the whole housing sector. As far as the Americans are concerned, and also in the UK you will see significant boost as far as house builders are concerned. What's affecting the house building is simply there's a supply issue, and therefore the price of supplies is going up and up and up. That's more or less it. Only trade regulated platforms, only traded with a regulated company. If you have any issues or anything you want to discuss, then call me, contact me, and I'll be more than happy to recommend a regulated platform. You can contact me on LinkedIn, WhatsApp. I'll probably set up another WhatsApp group because we've already exceeded the number of subscribers. You can subscribe direct onto YouTube. Become a subscriber and you get it direct to your phone or to your desktop, whatever you want. What else? Trade carefully, trade small, allow big money, big areas for stop losses to allow your trade to go which direction you want it to go in. My name is Mayor Walensky. This is Driving Markets. Have a good day.